So it's not too much of a surprise that the Calgary real estate market is showing some signs of slowing down, but is this seasonal adjustment or is the actual market turning for the worst? Because I have heard both ends of the spectrum, but let's go check this out. So for the third month in a row, the Calgary real estate market has seen some declines for the total residential benchmark price, meaning that a price for a set amount of attributes has actually decreased. This is due to new listings coming to the market and sales declining month over month. But is that included in all areas of Calgary and all property types? Let's go check this out. My name's Adam Fife, your Calgary realtor. If you're looking at getting into the market, buying or selling, it is very important to look at the data and figure out how this is going to benefit your personal situation. Go ahead and use the Auto AI home evaluation or reach out to me directly by booking a call. The Zoom link is in the description. So let's get this started. Sales are down year over year and new listings are up year over year. So this is obviously an indicator that the market is slowing down in its entirety. If we look at the year over year stats from October to October, September to September, we have decreased by 438 sales and we've increased by almost 500 new listings compared to last year. Now, when you start to look at the inventory, there is almost 1,700 new homes left over at the end of the month compared to last year, as well as a months of supply increase of 1.15, all the way going up to 2.5 compared to last year. Now, let's remember that last year, the Calgary real estate market was red hot. We were going through some crazy increases in price point all throughout the city all year, and it really didn't slow down in Q3, Q4. So just keep that in mind. Now, let's go ahead and see what the Calgary Real Estate Board has actually written about this market. If you want to read this on your own, go ahead, pause the video, skip to the next chapter. New listing growth driven by higher priced homes. Rising sales in the upper price ranges were not enough to offset the pullback occurring in the lower price ranges, as sales in September were 2,003 units, 17% below last year's record high. Despite the decline, sales this month were still over 16% higher than levels traditionally achieved in September. We're starting to see a rise in new listings in our market. However, most of the listing growth is occurring in the higher price ranges. While demand has stayed strong across all price ranges, the limited choice for lower priced homes has likely prevented stronger sales in our market. While the challenges in the lower price ranges are not expected to change, improved supply combined with lower lending rates could help demand strong throughout the fall, but without the extreme seller market conditions that contributed to the rapid price growth earlier this year. New listings in September rose to 3,687 units, the highest September total since 2008. The rise in new listings compared to sales did support some inventory growth. September inventory levels pushed up to 5,064 units, nearly doubling the exceptionally low levels reported in spring, but remain below the 6,000 units we typically see in September. Okay, so let's keep that in mind. Yes, we're obviously up, but we typically see 6,000 in September, and I'm going to touch on that quite a bit in this market report. Improving inventory levels compared to sales is continuing to shift our market towards more balanced conditions. In September, the months of supply reached 2.5 months. While this is a gain over last year's record low, conditions are still tilted in the favor of the seller. Additionally, supply in the market has taken some of the pressure off home prices over the past few months. Following stronger than expected gains throughout the spring, in September, the unadjusted benchmark price was $596,900. So it actually dropped below the $600,000 that we saw last month. So let's continue on here. Let's increase this a little bit and continue on with this. So this chart is very, very interesting because it shows even just last year, right? Like we had a similar amount of sales as what we did this year, right? Around 2,000 sales, but we had very low inventory. And that is a clear indication that the pricing is most likely going to increase because the amount of homes left over at the end of the month was not enough to absorb the amount of demand that's in this market. There are still people looking to buy Calgary real estate, but now we have a lot more new listings come to the market, which is something that I actually talked about at the beginning of the year, saying that we needed to see more new listings come to this market if we wanted to see any sort of price cooling. Well, that is now the case. We are seeing more listings. So let's actually look at this here. So this is City of Calgary total sales. So this is all the sales combined into one stat, and this is the year to date. So if you actually look from 2013 2023 and 2024 were very similar, right? We're very similar to the amount of sales that we saw in 2021 as well. So when you look at the sales aspect year to date, we are noticing the same amount of sales. Now, if you look at 2021 and you look at 2023 and 2024 in the detached market, obviously you've seen a sharp decline and a pretty heavy increase in apartments, but the amount of sales is still the same. Now, if you look at the actual new listings, yes, we've seen some increases in the new listing market, which is great. We're above that 10-year average and we're above last year, but now it's increased so much that we have seen a actual slowdown in the price point because now the inventory is increasing, allowing good buyer agents and good buyers in the market to actually negotiate on product. So let's keep this in mind. Now, this is again total city, all year to date. So this is not month specific, but this is year to date. So we need to break this down into the months, the quarters, as well as individual quadrants and communities. This is just a high level overview. Now, total sales in September, obviously we saw a decrease from last year, but last year was a 10-year or like a record that we have had in this market. Like we had almost 2,500 sales last year in this market. Right? This year, we had just about 2,000 sales, which seems pretty on par for a lot of other markets. Like you remember 2013, 14 when we had a pretty crazy year? Well, this year, we're still at that amount of activity, but we have more options now, right? Like 2021, September, we actually had more sales than we did this year. If we look at the inventory levels, right? Yes, we have a little bit more inventory than we had in 2022 and 2023. We had next to no inventory. But when you start to look at the long-term trends of things, we still have a relatively low amount of inventory in this market. 2013, 2022, and 2023 were the only years that we had less inventory than we've had now. So yes, people are probably going to scream from the rooftop that the market is slowing down, which it is, but is it going to slow down over the winter through seasonal adjustment? Or are we actually going to notice a crash where the market is going to decline to levels of price that we saw over the last couple of years? Let's dive into this a little bit more. Now, this is a breakdown. It's similar information to what we saw with that graph, but at a numerical value. So you can see that for the months of September, our sales were 2,000. Our new listings was 36 and our inventory was over 5,000. This is total residential for the month of September, right? So when we compare it to last year, obviously from those charts that we just saw, last year was a very hot year. We had 2,100 sales that month and we had almost 3,200 new listings come to the market. Well, this year we had more new listings, less sales, and the inventory is increased. So the benchmark price fell, right? The benchmark price fell from 601 total residential with those attributes that are added into the equation to 596, right? And if you're curious of what those attributes are, I actually have a link in the description which showcases all of the individual quadrants as well as the total city. So when you're looking at the attributes for what the total residential price gets you in Calgary, this is going to change obviously all over the city, but for the total city itself, you can get a 3 above grade, 2 full bathrooms, 0 bedrooms below grade, a double attached garage, 1,277 square feet. You've got poured concrete basement and built-in 2,000, right? So when you start to look at this price point here at 596, you get a finished basement, but no bedrooms, right? But when you start to look at other price points and other benchmarks in the across the city for each individual quadrant, like you see City Center for total residential is only a 2, and again, 2 bedroom up, a 0 bedroom down, built in 2000. You can see in East, it's built in 1975. So you really start to break down all of the attributes, which makes the benchmark price really nice to follow because it has something tied to it. The median price actually increased, and the average price actually increased as well, which is very fascinating. So there was a increase over the last 2 months of the average price, so higher end properties sold more than lower end properties, but those higher end properties actually were able to get a discount or a negotiation on the actual purchase price, drive that price down, which pulled the benchmark price down, right? So this is where you have to start to break down these numbers in a little bit more of a detailed manner to get an actual picture. So the higher end homes actually pulled down the price point, right? In years past, we've actually seen the lower end homes, like as if we just look at June, July, the lower end homes, when the average price dropped, increase the price point, meaning that when you were offering, a lot of those people offering on like the $400,000 homes were offering like 420, right? Where they actually increased that benchmark price. Where this month, the higher end homes are actually driving the price down, right? So it's very, very fascinating. So that means that if you're looking in that higher price range, you might actually have more options compared to some of the other property types as well as the other quadrants in the city. So that doesn't make sense. Let's go and look at this here. So this is a kind of a high-level breakdown of the market in Calgary. So you can see the total residential price point has actually dropped by $5,000, right? Pretty significant drop in a sense, right? We're so used to seeing $5,000, $6,000, $8,000 price increases month over month for the last like 2 to 3 years. Now we're starting to see a slowdown. Is it seasonal adjustment? Let's continue to dive into this. Year over year, we're up. The detached prices are down 55, semi-detached are down 28, townhouses are down 25, and apartments are down 15. So we are seeing reductions all over the city. Now, let's continue on here. If you want to read this on your own for the individual property types, by all means, go ahead, pause the video, read what the Calgary Real Estate Board has written about these property types, and you can be a little bit more educated. But like mentioned before, if you're actually looking at getting into the market and you want to have a little better of an edge compared to your competition, if you're looking to be a buyer and investor, book a call. The Zoom link is in the description. I promise I'm pretty easy to talk to. I'm very data oriented, so if you're looking at certain aspects of property types or areas, we want to make sure that we're looking at all of the things that have happened over the last little while. So you can see even just today, right? If we just look at today, there was 20 closings, right? A bunch of townhouses, a couple of detached homes and apartments. If we look at the sales to price ratio, if we look at this compared to what we've seen in the past, and we're only looking at the first 20, you can see that 1.03, 1.01, 1.01, and 1. Majority of people are getting below asking price, right? Now you have to obviously break this down and look at the price points, but you can see the majority of people are actually getting less than the listing price, which has changed compared to what it has been. And if you are curious of what your home is valued at, because things are shifting, go ahead and put your property address in this instant home evaluation tool. I thank everyone who's used this. I will end up calling you. I will end up introducing myself. If you're looking to just kick some tires and just have a general understanding of what the market's doing for your specific asset, by all means, let me know, because I can get you a little bit more of a detailed overview about your market, your community, your neighbors, and just try to get you as much information as possible without making any major commitment. Now, let's look at the microeconomic breakdown here. This is a very interesting chart. We'll move this over here. I'm going to actually make this a little bit smaller. You can see that this column here, the majority is red, right? It's very obvious. Again, you can see that there is still some quadrants and some property types are seeing increases. As an example, City Center saw a $6,000 increase. You can see apartments in in West actually saw a $5,400 increase. You can see semi-detached at City Center saw a $45. Townhouses in City Center, townhouses in Northwest, townhouses in West, all still see increases month over month. So we're not seeing decreases across the entire spectrum, but they are still evident. Like detached homes, as an example, in North saw $11,000 decrease. Southeast, $15,000 decrease, right? And when you look down here, you can see semi-detached in West saw a $13,000 decrease. So there is some pretty big decreases across the entire city, but not every single quadrant and community are seeing those decreases. Now, City of Calgary total price change. We are noticing this downward trends, which I was somewhat expecting as soon as it started, right? Yes, the interest rates have fallen, but there is a lot of speculation in this market that we're going to see some sort of crash. Are we going to see the negative year-over-year decreases in this market? There's a possibility. I don't really see it quite yet, right? Yes, we could dip down to quite low, like 1%, 2% year over year, but I just right now don't personally see the Calgary real estate market dipping all the way down to the negatives and actually having a decline from the previous year, right? So when we look at this here, right, we've seen this before where we see some slowdowns and then it picks up, some slowdowns and then it picks up, right? The Calgary real estate market is still very attractive for buyers and investors. There has been many people moving here, right? When we look at this chart here, right, supply and demand, population growth in Alberta, unless we see some sort of mass exodus in this province and in this city, I really don't think that the Calgary real estate market is going to crash. I don't think that all of these people who moved here are going to completely stop looking for properties, right? When we start to look at the new housing prices in Canada, Calgary is still one of the most sought after places. We're seeing 4.1% increase in new home prices, where you look at things like Ottawa, Kitchener, Winnipeg, Sherbrooke, right? All of these places are seeing some pretty major decreases. So I just don't fully see the Alberta real estate market actually crashing quite yet. Now, one of the things that I want to bring up is seasonal adjustment, right? So you've got, this is 2024. So you have 5,000 homes inventory left home at the end of the month, and you have 2,000 sales. Last year in 2023 was somewhat of an anomaly, right? We had 2,000 sales, which is similar to this year, but we had very little homes left over at the end of the month. If we look at 2022, we had almost 2,000 sales and almost 4,500 homes left over at the end of the month, right? Which is very similar to what we see now, right? Obviously, the trend is a little different compared to 2023. Sorry, I've got this chart messed up. 2024, you can see over 5,000 homes left over, 2,000 sales. And you look at 2022, you have 4,500 and under 2,000. And then look at 2021, we had over 2,000 sales and almost 5,000 new homes left in inventory. So when we look at the last 3 years, we're really not anywhere out to lunch. It's fairly normal for us to see this amount of inventory with these amounts of sales in the entire city. So for this reason, yes, of course, we've cooled down quite a bit. This is fantastic. We don't need to consistently be in this territory here, where the sales and the inventory are so close, right? We want to be somewhere, in a sense, in this area where we have a lot of options, right? Look at 2022. We have a lot of options. We have a lot of homes compared to the sales, right? We don't need to be in this crazy sales to inventory being so close, because that's what's going to drive our prices up to those Toronto and Vancouver prices. So for that reason, I really don't think that this is out of, I don't think we're out of context here. I don't think that we are seeing anything too dramatic. Yes, we are slowing down, but we're kind of slowing down to the norms, right? We're slowing down to seasonal adjustments that we usually see every single year. So if you have any questions, if you're curious about how this affects you, go ahead and reach out. I thank everyone who watched these things. Please ask questions in the comments below, but we'll see you on the next one. Make sure to join the live on the 14th. Peace.